IB Economics, The Role of Central Banks in Controlling Inflation, a case study of the European Central Bank. Hello fellow students. Today, I want to talk to you about a vital topic in IB Economics, the role played by central banks in controlling inflation. While this is a complex issue, I will make it as easy to understand as possible by using the case study of the European Central Bank, ECB. Firstly, central banks use interest rates as a tool to control inflation. The ECB is responsible for managing the monetary policy of the Eurozone. When inflation rises above the ECB's target rate of 2%, it can decide to increase the interest rates. This policy would decrease the money supply and thus reduce consumer spending, causing inflation to decrease. However, sometimes controlling inflation means making tough decisions. In March 2020, the ECB had to decide whether to raise interest rates to control rising inflation. However, the COVID-19 pandemic had just hit Europe, and raising interest rates during a recession could cause a massive economic contraction. In this case, the ECB decided to delay raising interest rates. Central banks also use other tools to control inflation, including adjusting the reserve requirements for commercial banks and buying and selling government bonds. By adjusting reserve requirements, the ECB can increase the level of reserves banks must hold, thus limiting the amount of money they can lend out and hence curbing inflation. Central banks also regularly communicate with the public to manage their expectations. For example, they release statements on inflation targets and interest rates. The ECB also holds regular press conferences where its president explains the bank's decision-making process. Finally, there are criticisms of the role of central banks in controlling inflation. Especially when they raise interest rates, they can harm economic growth and large-scale employment. Critics point out that the ECB's focus on keeping inflation low can cause the central bank to dismiss the needs of the people. In conclusion, central banks like the ECB play a crucial role in controlling inflation. However, while they strive to achieve this goal, it is essential to evaluate the potential for negative economic and social effects. By studying the ECB's actions and policies, we can gain a better understanding of how central banks operate and the consequences of their decisions. Thank you for listening.